Hey traders, welcome back to another video. Today we're taking a look at the markets ahead of what could be probably the biggest volatility week of this entire month. We've got today later the federal funds rate decision as well as the meeting which will follow and will cause some volatility. But before even that, we have to discuss what just came out in terms of news numbers and interpret this a little bit here this morning, which is of course, I'm talking about the ADP non-farm employment change that just released, came out at 296,000 jobs compared to the 148K. Of course, this is causing a bit of a stir here in the markets, and we're seeing some reactions on the gold price. We're looking at the dollar, seeing the dollar up pretty good there today. You can see a little bit of a rebound off of the lower time frames here. But what I find very interesting about this is that the dollar is not rallying bigger. And part of the reason I think that that could be is because, again, we have a very large Fed rate decision coming out later. Despite that, what we see here is gold pulling back. And I want to talk about this because gold is something that is hot on my watch list. And I'm also going to talk about some trades and things that I'm looking for going into today's Fed event. So let's go ahead and jump into the technicals first. When we talk about gold, what I notice is that price was able to break through a key level of resistance that we've talked about on the channel for a while now. We're talking about the 2010 mark. The 2010 mark was able to officially break to the upside. You can see this big green candle that gold printed was a very impressive breakout in my view here, getting us outside of this range and potentially signaling a bigger move to the upside in my personal opinion. Now I am clearly bullish on gold, and my thought process on this is that if we do get pullbacks here today, I'm going to be very careful because of course we have the Fed meeting right around the corner, but I do like gold to the long side, and I think that there may be some opportunities to pick it up on a pullback going into the remainder of this day. We'll watch out for that, and again, I'll look for some sort of confirmation. If I do take that trade, it will be shared inside of our Discord channel, which is linked in the description down below. Now, in terms of gold here, where do we think it could go? Well, we're trading at 2012. I think that if the bulls actually get a hold of, if we get a bull run going here, we have potential to trade back up to levels like 2045. And from there, we are talking about challenging the potential all-time high, which we have, you can barely see it on my chart here. It's marked around 2070. Now, we're getting a little bit ahead of ourselves, but I do like this trade to the upside. I'm looking for that opportunity to try and trade that break to the upside there. And let's go through a little bit of the reason why. Now, what you'll notice is that gold is on our EDGEFINDER as a strong buy right now. And for the reason basically that all of the factors that we look at, COT data, retail sentiment, seasonal trends, trend following, GDP, inflation is a big one, unemployment and interest rates, all of these favor a bull case scenario for gold, at least the way that we interpret them. So if I pull up gold specifically, I want to show you this because again, this is the more in-depth breakdown of why the EDGEFINDER is bullish on gold right now. So when we get this all populated, you can see there's a lot of blue on this screen. We have one of our strongest readings to the upside right now for gold, and it's been saying this for a couple days now. So I've been looking for an opportunity. I'm waiting for a pullback as we speak to see if I can get in myself. Of course, that is not financial advice. It's just what I'm doing. It's my opinion. I can be wrong, and I've been wrong before. So please don't think I'm invincible just because I have a bull case. Here is my bull case, though. COT data is where I'd like to start in terms of this. You can see big money is very, very positioned long on the gold market right now. If you take a look at retail, though, retail is doing the opposite. They're shorting this rally, which is actually an attractive opportunity, in my opinion, to go against the crowd. So when I know the crowd is very short something, I actually like to be a little bit more preferenced towards the long side. As we know, retail traders tend to be on the wrong side of the right moves. Seasonal trends, we also have positive expectancy in May, and then trend following. And by the way, I just brushed over that. This is, of course, a key component to what we focus on. Seasonal trends, month-to-month averages for particular assets can be very useful at looking. We have an upward trend that's pretty clear. We have a breakout to the upside here today on the technicals. GDP growth has been, we've seen the recession fears a little bit on the cusp. We also have bank concerns, right? Fallouts from banks could be very, very upward pressure-y for gold, as fear can drive the price of gold, as we know. Inflation is a big one too. We're still floating at 5% inflation. This is on the come down, but it's still very, very high. And this is a contributing factor to our bull case on gold as well. So that's all said good. I do like this thing to the upside. I'm looking for an opportunity to get long. I do like the idea of trying to pick it up around 2005. If I can get that pullback, I will probably be looking to pull the trigger on the long side with a stop below market structure. So that's one chart that I'm very, very interested in. Remember, guys, I will be sharing any trades that I take with inside of the Discord channel. This is what it looks like. So I recently took a trade on the S&P 500. I share all of my entries and exits within our Discord channel. And if you're not already inside of our Discord channel, we're going to do something very unique today. We're going to offer free trials for the day. It's a great day to get in on it. Come join the action, check it out. Here's how you can do so. There's going to be a link down below in the description. And if you click that link, it's going to open up a live chat conversation with one of my team members. Click chat now, click VIP trading signals, and ask them to try out the Discord for the day. So click this link, say Discord free trial or Discord checkout or something like that. And you can come join us for the day and get in on all the action while we trade the Fed meeting here today. It's a huge day. And again, that is a rare opportunity to come join us for the day for free. So click that link down below, chat with one of our team members, and come join in on the action. Next up, we'll take a look at the dollar here. So the dollar rejected this level here of resistance. You can see 102.2. Getting rejected here pretty strong. In my opinion, the dollar has room to continue down to like 101.3. I'm definitely not a dollar bull. I'm actually much more on the bearish side. I'd be interested in dollar shorts specifically. If we were to get something like a breakout 101.3, I think we could trade back down to 100.9. Part of the reason why, again, I'm very bullish on gold. As we know, gold tends to rise when the dollar falls and vice versa. Again, we'll have to see what the Fed meeting brings here today in terms of dollar strength or weakness, but we'll watch that one closely. Next up is the S&P 500. You guys who are regular stream and channel viewers, you know that I was bullish on the S&P. I had a profitable trade on this one. As I mentioned, I was able to trade this on the long side here a few days back and just closed out yesterday for a profit. Fortunately enough, because again, we were able to trail out just before the thing sort of fell apart. Took this thing long around this area, rode it all the way up. And again, not all my trades are this good, but this was a really good one. So we'll see if we can catch something else going into the remainder of this week. Here's the daily chart for the S&P 500. What I'm a little sketched out about and why I took my trailing stop pretty quick was we rejected off of this this daily time frame high right here around 41.60. So after we tagged that and pulled back, I was just no longer interested and decided to get out of my S&P trade. There's a couple scenarios that would get me long again. I'd be interested if we do get some steeper pullbacks here with some signs of support. I do like the idea of trying to get the lows here around 40.65, let's call it. We'll see if that comes into play. But the other case scenario would be if this level actually gets some strength here above it. So if we get like a break above the previous highs, I'd be interested in pullback plays. Again, we're not quite there, and this is a little too soon to say if I have a trade set up immediately ready, but it's an idea that I'm watching for going into today's Fed meeting, which will cause some steep volatility one way or the other. So we'll see how that plays out. Again, I'm looking for a break of the highs to intrigue me more on the long side, or a deeper retracement if we get it. So I'll be looking out for that myself. Same thing with the NASDAQ. If we can break through the highs, that would be a really key thing for me if we were able to get back above the highs. But also if we get a deeper retracement, I'm also kind of interested in this as tech has been performing really, really well. Some of the earnings have been really strong. So personally, I do like NASDAQ 100 long as well. So we'll watch out for that going into today. So US 30, not really too interested personally. I prefer the NASDAQ and the S&P over the Dow. In terms of the euro, let's talk euro here for a second. So the euro had a big dip here, but actually found a lot of support. This is a daily chart. Let's drop it down to the 4-hour and we can see what's going on here. So we had price hold this 1.096 very, very well. And I think that you're sort of just going into or going back into consolidation here. We have a big event today that will cause some volatility for US dollar crosses, especially the euro. And we'll be watching to see if this thing is actually able to break through the highs. That could be very, very intriguing if dollar weakness comes in. You know, the euro bulls, you may want to keep an eye on this one because again, it could break through where it's several several times struggled to do so. So we'll watch out for that going into the event here today. And then, you know, if we do see massive rejection, if we see the dollar get very strong, if we, you know, something like, hey, we're expecting more rate hikes or something like that, you know, that would be the flip side scenario. But the euro, interesting there. We've also got the pound, similar story here. Although the pound has been, in my view, it's been really, really strong, even compared to the euro. You know, we've been trending up, and this makes a lot of sense in the regards to, you know, the Bank of England is at a point where their inflation levels are very, very high. We've discussed this on the inflation data chart that we've been pulling up recently. You can see I've got it saved from yesterday's live stream. So inflation in the UK is in the red, and if we could zoom in on this chart for a second on the edit, that would be awesome. So check this out. So if we're looking at the inflation between the two here, we go back from when all this craziness happened and started in 2020, where the printers came on for central banks. Well, at first the US led the inflation charge, in the UK trailed behind, but then the UK just kept going and has now been stuck above 10% as of its latest CPI readings. So what does this tell us? Well, it tells us that this is a problem. They want this to come down. How do they get that to come down? They have to raise interest rates. And what does raising interest rates do to the currency? It causes it to go up. So, you know, you have the US sort of seeing this decline and the UK staying really, really stubbornly high. So in my opinion, this creates a divergence where the pound has to raise, or the UK has to raise their interest rates, and the US, you know, kind of could potentially pause. That's kind of the camp I'm at, is I think that they may pause with concerns around, you know, banks collapsing and that sort of thing. So anyways, what does that do? Well, it causes a divergence where the UK has to raise interest rates more aggressively and the US can sort of stay flat. Well, that causes a demand for the pound, right? As people may be more attracted in that higher yielding, central bank offering, that rate hike, right? So interesting thing to watch there with the pound is, I think, potential bullish breaks. If we're able to break through resistance levels, I think that has an actual catalyst to go with it. So if you get like a screaming breakout, you know, pullbacks, momentum trades could exist when looking at the pound. Now, same thing sort of applies with the euro Japanese yen and the pound Japanese yen. There's a bit of a divergence here. So again, the ECB has a much higher interest rate compared to Japan, which has recently said that they plan on stubbornly staying at that current interest rate, that minus 0.1% interest rate. Whereas, you know, Europe may have to continue its rate hike. We'll see about that on Thursday. They have an ECB meeting, which should be interesting. And you've got this 38.2% coming in. I'm more intrigued personally if we get a pullback to like the 61.8% retracement on this 4-hour chart. I really like euro yen long, and same thing applies to pound yen long, although I think that this is even steeper than a 61.8%. Yeah, you can see it's just barely beyond the 61.8% retracement around this area here. This is in my view, our most relatable area of support, which is still a good distance away. Now, would I recommend just jumping right in? Personally, I'm going to be a little bit cautious there because, again, this is a steep fall, and you know, you would expect some strength to come in somewhere here if we're going to stay at this trajectory. So I think that you may get a good opportunity here, in my opinion, at the 61.8% retracement, but I'd be waiting for some sign of confirmation, some, you know, candles holding the lows kind of thing, holding it together before potentially looking at long trades. Personally, I do believe that this is on our watch list. Both of these currency pairs show up. Yep, you've got pound yen on the watch list, and you've also got euro yen as a strong buy. We're getting confirmation in several categories that we watch for: inflation, unemployment, GDP, trend reading, seasonality, retail sentiment. These are factors that we pay attention to try and make better informed decisions. So those are currency pairs that I'm watching going into the remainder of this week. The 10-year bond sold off big time, and this was in response to some bank collapse fears, and you know, that continues to be a downward pressure on that, and we'll have to watch how that's impacted with the event today. Oil, last one I'll mention here today, absolutely crashing, continues to sell off with no seemingly bottom in sight. We'll have to wait to see what happens with the Fed meeting here. If things stay hawkish, this probably puts a continuation to the downside on the oil market. And that just to me does not look like something I want to buy at this time. If it starts to break out and we start to see something more dovish or more relaxed or global economy looking better, that's a different story. But for me right now, oil looks really, really weak, and I don't believe that the EDGEFINDER has any bias on it anyways. So I have no trades personally playing on oil. Thank you guys for watching, and we'll see you today for the live stream at around 1:30 p.m. US Eastern. We'll be going live. See you there. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.